Right on. Well, welcome back. Welcome back stateside, my friend. A huge week behind us, a huge week in front of us. We got a ton to talk about as the people climb in. Feel free to hit the like button, subscribe to the channel on your way in. Tom, what did you think about Friday, man? Russell up and away. Is this another pump fake? Should we believe the strength in the Russell that was exhibited on a one-day basis? The Russell finished up like 3.5% for the week. S&P, the Nasdaq, the Dow was all up between 1% and 1.5%. What did you make of the whole week, but it's in particular Friday's market action, man?
Well, let's start with the Russell. So I felt all week, that the Russell was if you had to buy anything, you had to buy Russell. And so I'm glad that kind of in a crazy way saved us because I was short everything else and long Russell. But so that I guess if you ask me, am I surprised Russell relative to anything else? No, I'm not surprised at all. Am I surprised by the magnitude of the move? Well, of course, anytime you get a 3% move when you're based on implied volatility, when your expected move is 1%, you're basically there's less than a 5% chance of that happening. You're essentially talking about almost a 2+ standard deviation move. So I don't think that so I guess the magnitude of the move surprised me. The fact that the Russell outperformed did not surprise me.
Mm-hmm. Makes sense.
Yeah.
Makes sense. As we get ready to go into this week, I don't know if you think of this week any differently than any other week. I suppose that might be a good introductory question, but there's, getting past Jackson Hole, getting into a second revision, a GDP, and whatever's on the calendar here. How are you thinking about market pricing and whether you think we're rich, whether you think I don't think you'll say this, but if you think we're cheap, how are you thinking about positioning going into this week? It's a big week.
Yeah. So, I mean, I was positioned short. I was short Delta on coming in Friday because on Thursday, if you remember Thursday, we were down 50 handles in the S&Ps. Friday, we were up 50 handles in the S&Ps. So the Thursday, Friday was kind of a wash based on S&Ps. I was short, starting early in the week. So I'm still short. I didn't cover any of my position. I feel like, and I had no interest in taking profits on Thursday. So I'm considering that Thursday wasn't necessarily a fluke. I don't think they said anything on Friday that was a surprise at all. I think that, a lot of people are going to think that it had a lot to do with what happened in Wyoming and blah, blah, blah. But I don't think so. I think that, especially late in the day, I think the shorts just capitulated. And I think they were positioned really well on Thursday. And I think on Friday, when we had a sell-off like around kind of midday, early afternoon, and it didn't hold, then the shorts just capitulated and took it all the way back up because it got a little thin late in the day. I don't read anything into this. I think it would be foolish to think that you saw something on Friday or that meant something. I think that it was just, that's trading. We were down 50, we're up 50. They offset each other. What are they doing tonight? They just opened. They're down a buck.
We just opened them.
Yeah, basically unchanged.
Not much.
Russell strong. I mean, relative, the Russell's a little stronger than the S&Ps, but it's a nothing opening.
Yeah, crude oil up 0.5%, natty gas down 1% or so. Some of the metals doing okay. Not much. No screamers yet.
Yeah. I don't see much. Just giving a quick look, it's kind of flat opening, which after 2 days of 50 handle moves up and down, that doesn't surprise me that, you'd have a kind of a flat day. I do think it's going to be a pretty good week. I think it's only going to be a 4-day week because Friday you can pretty much write it off. I think going into a long, weekend and generally going into a 3-day weekend, they kind of, slow down on Friday. So I think you got 4 days here where you're going to see some decent trade. And I expect more of the same that we saw last week. I think you're going to see two-sided trade this week. I don't think that this is any way, I don't think this level up here, 56.5, maybe they get to 5,700, but I don't think so. I think there's a better chance you see 55 before you see 57. So that's a little bit of a bearish call.
So that was going to be my next question. Where do you see pot odds? As we're trading at or near all-time highs. So if I could take a guess, you're going to say the pot odds are to the downside, but
Yeah, they are.
I wanted to ask you the question.
They are. The pot odds are to the downside, but they were last Sunday too, and it didn't work. So the question is, we go one more week, and I think that vol, and I'll say the same thing I said last week, because at this current level around 15, let's call it, in the VIX futures, 1580 or something, and VIX just probably a little below. I'm not looking at the actual VIX right now. Yeah, same price.
Same.
With all the stuff that's coming up over the next couple of months, I just don't see vol getting that much cheaper. Maybe you get into the 14 handle, but I don't think you see vol getting that much cheaper. So I kind of think you're going to see a lot of two-sided action. And I don't mean just this week. I think the theme going into the November election and maybe beyond is going to be a lot of churn. Like we could go up a couple hundred points from here, down a couple hundred points from here. And we're going to be at 5,600 come around the election, or 5,500. I don't think you're going to see, the market's not going to crash here, not with bonds at 124, 125. And the market's not going to explode either, because if it was rallying on interest rates, the news is out, and you're not going to have any, from a political side, you are not going to know what's happening until the night of. I mean, the race will be close. I think that, I think it'll be hard for Trump to have a lead going into election night. But the other thing is, he usually underpolls. So, that's why it'll be maybe closer than people think, but we'll see.
Yep. There's been, well, I don't want to go that direction. Let me ask you we'll stick to the bonds for a second. Where are the pot odds in the bonds, in your personal opinion? And do you even care? There's this back and forth between, will we get 50 basis points or 25 basis points in September? It doesn't matter to you. Okay, where are the pot odds in bonds?
They're not even there. There's nothing. I mean, it's definitely not to the upside. I mean, the bonds have just had a 7-8 handle rally. It can't be to the upside. But if you look at the premium in the bonds, there's no call skew. Like there's no, the options, the bond options are not telling you that there's like velocity risk in there at all. What the bond options are kind of showing me is that there's just like, okay, we're it's a pick on market. So at 124 and where are they right now? 124, almost 125. At 125, they're basically saying, pick them. What do you want to do? There's no juice either way. I don't even like the bond premium right now. I don't like the yield curve trade. I don't like the bond premium. I just think there's so many things. If you're looking for an extreme, there's much more liquid products like the S&Ps, and there's much more extreme products like, what's happened recently, maybe in the NASDAQ or some of these chip stocks that have exploded back to near highs. I think there's more interesting things there.
Would you rather be long stocks, short the index, or short stocks, long the index?
I think the easier play is to always be short the index, long stocks. I think it's the riskier play, so I wouldn't do it 1-to-1, but it is very hard to pick individual stocks. Like if you're bearish and you want to pick a handful of stocks, like what do you pick? I mean, it's like, I don't know that it's very easy to pick stocks unless there's a specific stock. Like right here, I'm short really two stocks. I'm short Netflix, and I'm short Nvidia, and both of those, and I'm a little short Meta. Two of those three stocks were down on Friday. Netflix and Meta were both down, and I'm short both of those. Nvidia was up, but like those are hard plays, to pick individual stocks. The indexes, I think that's where, if you're right, you're right.
Yeah, I agree with that. You just mentioned SMH and some of the chip stocks getting a little bit weak. I'm just going to throw out a few just because I talked about them a little bit last week, which was the home builders I was looking at. They had the complete opposite move I thought was possible on new home sales on Friday. You got an explosion of a lot of these new home builders. So now they're at or near their all-time highs.
Yeah.
And then the clean energy trade. So this is PBW. It's not really a good trading product, but it's indicative of things like the Teslas or some of the EVs or Albemarle, lithium batteries, that type of stuff. That had another lift last week. I think we're up another 5%. So that's a couple of weeks, decent weeks together. Is there any particular area other than the semiconductors you think is either weak or too rich?
The reason that I like the tech stocks is because they are very active. They trade. The markets are super liquid. You don't have to fight for fills. It's the most liquid place to trade. I mean, if you want to talk home builders, I mean, even XHB is a very mediocre at best 3-star liquidity, and probably closer to 2.5. And it's an ETF, it's a sector ETF. It's a very tough trading vehicle. I agree. It's out of control. And I have a small position on there. I kind of got a little bit run over on Friday, but there's nothing much to do in that. Like, it's really hard stock to trade. So it's not that I love all these big name stocks. It's just that, you know what? They're just a lot easier to trade. They're a lot more liquid.
I think real quick on the sector side, you mentioned XHB on the industry side. On the sector side, I think real estate was one of the top performers last week, up nearly 4%. And then the consumer ETF XLY was up nearly 3%, something like this. So, Starbucks, Nike, a few of these consumer stocks have gotten hammered. And you saw a little bit of a bid in some of those last week. Yeah. And then materials was up 2.5% as well.
Again, these are tough. If you're trading the stocks and you're buying some of these things, and you had the kind of the principal play on, then you made a nice trade. But if you're playing this as an ETF, like an option play or something, man, you need moves like this to get paid, and it's tough. So it's not like I disagree with you all. Yeah, like, look at this. These are. I feel like these are all better principal plays. Like, if you like them, you buy the underlying stock, maybe you write a call against it into an up move, and you just, you take your chances. I don't like the option plays in there that much. You're bringing up a couple of the Chinese stocks that I actually do like, but
yeah. So that's where I want to go. We're speaking of principal plays. Some of the Chinese stocks have put a couple of decent weeks together. Alibaba being one, Baidu not so bad, JD.com at okay performance post earnings. Are you getting closer to neutral on Chinese stocks given their positive performance? Or you still like the
bullish
positioning?
I'm still bullish. I took some profits in Baba last week, but I'm long Baidu. I'm long FXI. I think I'm long JD, but I'm not 100%. I don't remember tonight, but I'm definitely long Baidu. I sold a bunch of puts in there last week, and I'm definitely long FXI. I'm just naked long stock. I still think they're cheap relative. Baba just had a nice run, and it's been one of our best stocks of the year because we've been trading from the long side the whole year. I'm staying. I see no reason to bail on China right now. I mean, I think Chinese stocks do pose, obviously there's risk, but I think the risk in some of these beaten down Chinese stocks is a lot better than the risk in some of these, U.S. stocks that have already exploded. So yeah, I mean, if I'm looking at any international stock right now, China seems, I mean, it's liquid. I like that. I like the fact that you can trade Chinese equities, even though, you might be trading them in Hong Kong or whatever, but you can trade Chinese equities like Baba and Baidu and things like that. And when you think about other companies, other global companies or other international companies, it's very hard to trade anything but the ETF if you want to trade some other country. So that's the challenge.
I agree with you. What do you say we get Pete Momet in here?
Yeah, let's do it.
All right, Pete, welcome to First Call. Pete Momet, everybody.
Gentlemen, good to see ya. How you doing?
Good, man. How are you? Is this the week where that 210 finally uninverts, Pete? Is this the week?
I think we spin, my friend. We got all the way back out. We got down to 3.5 basis points out to 18. And we talked a little bit about this. It doesn't usually go to zero and just sit there forever and then kind of go uninverted. It tends to do it from a running start. I think Friday's action, we got down from 17 down to 11 basis points. I think this is where they take a run at it right now. Yeah, and I do. I think we'll run right through zero and probably get a little bit of extension out to 10 or 15 basis points, and then the market will kind of settle and see. But yeah, I think this is a because we saw both up, we saw decent down moves and up moves in treasuries last week, and for the most part, the 2s10s continue to uninvert in either one of those. So it seems like we're getting to a point where we're going to finally kind of take a run at this from a running start. So we'll see. I see nothing to change my opinion on this. The one thing you do need to do if you're in SEP, you got to think about rolling your notes and your 2 years to DEES. DEES is the front month now. ZN-Z4 is the DEES contract. So, and you'll notice there's a difference in pricing. Doesn't change the relative value of the trade. So you can roll for, I believe in bonds and notes in 2 years, it's either a quarter of a tick or a fifth of a tick. So there's nothing to do with it. It's very easy to do on the platform. So you do probably want to look this week. If you stay in your steps for a couple more days, it's not going to hurt you at all. But you do want to this week roll into the DEES. And if you're putting new stuff on, put them on in the DEES.
I hate when we roll to DEES because it makes me think when it's 90 degrees out, that there's something just wrong. Like we're rolling to DEES, it's like every time I roll to DEES, I know summer's over and it's the beginning of winter in Chicago, and yet it's 90 degrees out and you can't breathe.
Yeah, but what's great is that this tells me now we're getting out of the summer. If we were, we had some tremendous days to trade in the summer, but we're getting into the alleged meat of the last part of the year with the election in place and a changing rate structure, a dynamically changing rate structure. I think that's going to give us some exciting things to trade in the next couple of months. So this would be the last cog. And I think, Victor, you look at that 3.4% you mentioned in Russell on Friday, just unrelenting. Doesn't it really, guys? We've looked at this trade. We were all in this.
Yeah, but it hasn't until, we were all over this for 2 weeks now, but it hasn't, that was the first time it went our way,
So, you're absolutely right. But it seems, and I'm always mindful not to try to curve fit my reasoning against my position, but it seems like the fear is on, even at these relatively underperforming levels of Russell versus where NASDAQ is, seems like there is some definite two-way risk, and the fear is on if you want to step up and sell these Russells, it could be painful. So it seems like that sentiment has changed a little bit. And I honestly think if the yield curve does flip, that's going to give Russell another great push to the upside.
Yeah, but you can have the Russell stay steady here and the market crap out like a piece of cake like it did last time. I think the thing that people aren't forgetting that you just kind of brought up, Pete, is that the last time the market crapped the bed, the Russell was super strong, and then the market just fell out of bed because that's exactly what happened. No, like it's not like you sit here and you go like we're traders, so we don't give a crap. We buy Russell or something else, and so for us to buy Russell, a big deal. But when people have to start buying small caps and sell everything else, market doesn't like that, and it usually craps out. So if you think that Russell's going to be really strong here, then you should be long Russell and short the rest of the market.
Right. And I agree. And I'm trying to figure out, and we've got NVIDIA earnings on Wednesday. Stock definitely marking in a lot of good news. We're back up, within $14 of those all-time highs. Seems like another case where it's hard to say if a trade's crowded or not, but it certainly seems like we're going right back down to those very select few, and the amnesia over what took place in the downdraft is completely gone, and nobody wants to be left off the boat here. So, I'm trying to be a little bit selective here, but I think if we get good news or bad news out of this earnings, that is going to give you, especially if you get good news, you're going to get a bump in NASDAQ that's going to give you a great opportunity to sell back above 20,000, which I think is an interesting place to put them against my Russell.
Tom, how are you thinking about NVIDIA with a 10% implied move going into Wednesday's report?
Well, I'm already positioned in there. I'm a little short, but that's not much for me in there. But I do have a strangle on, pretty decent size. I'm short I'll tell you right now, hold on, let me find it. NVIDIA. I am short the 115 puts, which are about $3.67 where they closed, and the 147 calls, which are $4. So it's pretty much like a kind of a neutral strangle. I just didn't roll up the puts on the close, but they've actually pumped some juice into it this week.
Yeah.
So I think we sold that strangle at like maybe, I don't know. I think we're short that strangle at $8.10, and it's currently trading at $7.70. So it's in like 40 cents. I've been shorted all week. So I'm just playing it short some premium. But on Friday, when did you say Wednesday night's the earnings?
Wednesday, yeah.
Yeah, so Wednesday night, I'll just widen the strikes out a little bit, and I'll keep that position on. I won't have any deltas in there, and we'll see what happens. The good thing about NVIDIA is it's super liquid. It's everything. Right. It's going to trade, whatever. It's going to trade 50 million shares, on Wednesday and 50 million on Thursday. So you can do whatever you want in there. I don't think. Let's see. Last NVIDIA earnings was to the downside, right? I'm trying to remember. The last last three, I think two.
Yeah.
Two were to the upside. The last one's to the downside, if I remember correctly.
Okay.
And I don't have any opinion in NVIDIA. I mean, if it was 100, I'd be scared to be short. If it was 110, I'd be nervous about being short. It's 130.
Right.
I don't have any problem here. I mean, you're going to have a 10% implied move. Vic just said. So you're talking about $13, $14. Right. You're going to be able to go 2 times the expected move and still get some juice out of that. It's $130 stock. It's not the same thing as what it was trading for, $1,300, and you're selling things $150 away. I kind of like it better here. So we'll see.
Yeah, and I think you can't ignore the dollars move last week. Unrelenting 130. We talked a little bit about this. 130, 220 in cable, 112 in euros. We got through 110. We got through 130. The outperformance in the Aussie has really been interesting in terms of it finally. And it's had a great run, but 68-cent Aussie is still cheap. So for me, I'm going to be watching currencies. I think 132, 133 is an interesting place if you want to play a little bit of directional. On the short side, I think both the pounds and euros are they've gotten to that point where they've put the stress on the shorts, the weak-handed shorts, and I think we have a little bit of room to possibly pull back. Problem there is IV rank looks great, but euro volatility I think is only 8%.
No, it's lower than that. It's like 6.5 or something. The last time I looked, I think I looked on Friday because I have a bunch of positions on there.
Yeah.
What does it say?
7.
Pounds are 7.5. So the volatility isn't great. So this is where it would be a case where I'd probably look to sell futures or micro futures instead of necessarily selling calls here if I'm looking for that kind of action.
I'm short deltas. I'm short deltas in the euro, and I actually caught this one, and I've been long all the way up in the euro and the yen. But on Friday, I didn't get shorted on Friday, but I didn't roll up any puts on Friday because I think that it got a little ahead of itself on Friday.
Agreed.
So I think if they open the euro up a little bit higher tomorrow, I'm probably not going to get short, but I'm definitely not rolling up puts. I'm not neutralizing my position up here.
Right.
I am staying long the yen though.
Yeah. Well, and again, the yen at 144. Sure, we're off from the 160s, but we know that again that can add that additional elasticity that we haven't seen in so long here, where we can have some substantial moves. And if you look at Swiss, it's interesting. Swiss too is actually outperforming yen in terms of these up moves all last week. Swiss classic flight to quality play. I think it has a little bit more to do with rates, but Swiss really bid stronger even than the yen was bid. Some of the things like Canada Aussie, some of the cross pairs are Canada Aussies into 600, which I kind of think is a little bit interesting for me to buy some Aussie. It's hard buying Aussie here outright or selling puts after the rally.
I hate discussions on currencies.
Okay.
I think you're costing us our entire audience globally, Pete. But
all right,
the good news is
we're back to stocks then.
The good news is you're going to have your own show at 6:30 in the morning with Frank, and you guys could talk for 30 minutes a day about all the freaking currencies. And anybody that wants to watch it, they can get as much of you and Frank as they want about all this currency stuff. But on Sunday night, I don't care. I want to talk about stocks.
All right. Let's do it.
What about the gold? What about the gold silver ratio? Because you've made me a little bit of lunch money. I probably owe you a beer one of these days, Pete. Well, how are you thinking about it now that the gold silver ratio is somewhere around 84?
Yeah, I think we're kind of in no man's land with that. Silver definitely was the outperformer last week. Copper got well back above $4, $4.20. So they've all gotten to a point where nothing is pushed that far out of line. I mean, a 2550 print in gold is still rich, but I don't think I would look at selling gold up here and adding silver where I would have a week ago. So I think you got to pick your points, but you're going to get the next couple of weeks, you're going to get some opportunities through whatever they end up doing with rates, whatever the non-farm payroll number prints. And I don't care what it is. I just want the movement. If we can get back to that 90 level gold, silver, I like it again. Selling gold, buying some silver. I think copper anywhere below 410, 420 is interesting. Now you can use FCX, it's a great proxy for that. So, and you've seen the play in the junior miners too. And yeah, and that almost seems to me, relative to trying to pick the futures directionally right now, I'd rather lean against something like this right now. I think that's a better play if you're looking.
Meaning you'd fade this.
If you really think the whole gold, if the gold move is too much, too far, too fast, selling some calls here would be more interesting to me right now than selling calls in gold right now.
I think that gold silver ratio thing that you talked, when it was up to 90, Pete, it's only like a week ago or something, or like a week and a half ago. Yeah. Yeah, we traded it at no, not 90, maybe 89 or something. But I did it small and it actually worked. I should have held it.
Yeah. That's been a good trade if you're willing to kind of work around it's what we've been talking about for the last 2 months, working around the ranges of some of these things, not getting too married to the idea or the macro and just trading the ranges. And they've been giving you that on a recurring basis. So I think
it's such a hard trade to pull the trigger on because it moves around so much, but I like the fact that it's 1-to-1.
Well, and for me, I like the idea that, silver is the high beta part of that. And it's hard. Sometimes it's hard buying silver after a $1.50 rally. Yeah. But silver can go $3 in a blink of an eye. This is a way you can buy some silver and feel you've got some downside protection if you're early on the silver buy. So it's just another way to look at relative value between the metals.
Even those micro contracts are big too. When you
SAL, you mean?
/, SIL.
Yeah. SIL is the fifth size of the big one, and then MCG is the micro gold, which is the 10th the ounce. Yeah, they're not small, but
no. They move around. That thing moves around.
Yeah, big ones are big bites. Absolutely.
All right, Pete, that's really good stuff. And don't worry, we still love currency talk. We just have to move it to early in the morning.
Thanks, Pete.
Don't worry, that's when we have to move. That's when we have to move Victor's political talk too. And
that's why they put me at night. That's why they put me at night.
That's why we have to move everybody around to different times.
We'll have to have like little windows where we could signal each other in our early morning, late evening shifts.
That's right.
All right, guys, have a great night.
Yeah, thanks. Me too. Ilya Spivak. I wonder if Ilya thinks what's more important. Is it? I wonder if he thinks NVIDIA is the most important event this week, or if he thinks like the personal incomes and the PCE, the inflation number at the end of the week, is most important. What do you think is the key driver?
Yeah. It's NVIDIA.
All right. You're not too far on the dark side then.
The PCE number is not the big inflation number. By the time you get the CPI numbers out, the PPI numbers out, the market is usually very good at basically taking the relevant subcomponents there and going, the PCE is going to be this, and they're usually very, very close. So there's not a lot of surprise risk there, and because there's not, the market isn't really sitting there on tenterhooks going, oh my God, what's the number going to be? Is it going to surprise this way or that way? It very rarely has a big deviation one way or another. So there's not a lot of speculative fervor around it.
All right.
Coming out of Jackson, on the other hand,
what's
the
speculative fervor? Vic, I think the one thing you got, if you're looking this week, I don't think anything is going to compare to NVIDIA. I just can't believe that the numbers are bigger than NVIDIA.
I don't know. Raphael Bostic is speaking two evenings this week. Is
that your favorite Fed talker, Fed speaker?
No, I'm just kidding. So then,
it scares me. It scares me that you know that.
Oh, I know. I
don't care what he has to say, but it scares me that you even know that he's talking.
I know Daily, the San Francisco Fed's talking this week. It scares me that I know that. I don't want to know that, Tom.
I feel like
just wait till we start talking about what Isabel Schabel said at the ECB.
Oh my God, you guys! Actually, Vic, you don't. Ilya scares me too. The three of you, the whole afternoon team. I'm throwing Vecchio into the mix. I'll keep Dylan out because I don't think he memorizes the Fed speaker schedule. But between Ilya, Chris, and you all three of you scare me.
Yeah, he wrote his book. Greedy Bastards, which is a great read if you haven't got to read it. And I think he's done with the Federal Reserve. He's thrown that whole thing in the trash. So then, speaking of, what is the lens with which we're supposed to view the world, or at least risk going forward, Ilya, given last week's Jackson Hole message?
I think the response on Friday was really interesting. I mean, if anybody thought that Powell wasn't going to set the stage for rate cuts, then they weren't listening to him all of July. Because we knew about this. We knew it most recently in the minutes from the July FOMC meeting where they said all of these things, but he started talking about it in early July before they even had the meeting. He went to Congress and basically told them, this is where markets topped. This is still where markets topped. We haven't come back and hit those levels, S&P, NASDAQ, whatever. So we know at this point, going into Friday last week, what he's going to say. He's been saying it. The question is, I think for markets going into Friday is he going to really lean on 50 or 25 basis points? And does that mean anything? I think he gave them a little bit of a taste of, we could do 50 if we thought that were necessary. He sort of had his ECB moment where he said, we'll do whatever it takes kind of to make sure that the labor market doesn't weaken any further, and basically gave everybody the big dovish signal. We did not set a higher high in the S&P, and we did not even get close to setting a higher high in the NASDAQ. And that's really interesting, that the price action got their big, it's here, rate cuts, and couldn't set higher highs. That's what I'm most interested in. Now this week, there's really nothing except NVIDIA. And so there's lots of room for markets to find what their path of least resistance is, what sort of the default is. And interestingly, on Friday, Dow was up a lot. Russell was up a lot. It was kind of that early July before the panicky late July, early August thing. And there is no data. It was the
rotation trade, not the risk.
It was the
trade.
Rotation. Mm-hmm. Right. And Friday was that, sort of. Those were the ones that outperformed. Obviously, S&P and NASDAQ didn't sell off, but they underperformed notably. And so you look at that and you go, okay, if that's the default, what's to say that doesn't continue this week until NVIDIA? But if everybody is going to be essentially looking Wednesday and going, we're not doing anything until Wednesday, then you oscillate. You go back and forth and you chop around. And then if NVIDIA misses relative, or at least in trend terms, I mean, they've surprised on the upside at this point. Every single one of the past 6 quarters, but the magnitude of surprise has been getting smaller since the second quarter of last year.
That's what happens when you're worth $3 trillion.
Yeah, no, it's a lot. That's a lot.
And markets eventually normalize, right? Eventually, markets go. Here's what's a reasonable beating margin. So, and that's been narrowing and narrowing and narrowing and narrowing. Let's say they don't beat this time, or they beat by a really small amount. That might finally knock over NASDAQ. It might finally knock over S&P and essentially say, okay, there's nothing left to speculate from the Fed side. The AI thing is out of juice. Let's just distribute this a little. This no longer has speculative engines. It needs to cool off. We'll see, but the path of least resistance, I think, on the big indexes, NASDAQ, S&P, the risk reward looks better short.
I agree with you. And I also think it's going to be a buy the rumor, sell the news type thing. I think whatever the Fed does, it doesn't matter. That'll be whatever pop they make going into that. But I don't even know if
that'll be the week
that
after.
Long. Yeah, I know. I don't even know if it'll last that long. I think there's way too many people that have lost their minds based on, Friday's move and like the, writing newsletters this weekend. Oh my God, we're going to explode next week. We're going to scream, blah, 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 all this stuff. I mean, I'm like, what, have you all lost your freaking minds? They got people short on Thursday and they caught them and they squeezed them on Friday, and they'll be puking out. They'll be laying out the shorts again as soon as they can. I don't see any kind of upside. I don't think enough people are short to have any kind of a crazy upside squeeze here. I just don't think it's the case. If anything, I think people are caught long, hoping that we rally back up to the levels where they originally purchased some of this stuff and they can get out. I don't think anybody is, giant short here. I don't know. I don't know anybody that has a giant short position other than in the indexes. I don't think anybody, I don't know anybody that's short any of the individual equities, like where it's going to create some kind of crazy buying. I'd be more scared of like some stupid meme stock type thing, like Palantir or something like that. That scares me, but not the Nvidias of the world.
Let's you guys want to do,
by the way, as long as we love talking currencies, the flip side of that is if the markets come down, dollar goes up just because money goes into cash.
That is true.
Are you playing it that way this week, Ilya? Let's go.
I'm looking for opportunities. So I was long dollars through the late July, early August risk aversion because I wanted dollars for the risk aversion. Same reason I want yen and still have yen. Because that's where capital goes when it's a risk-off market. Carry unwinds and money goes to cash, and dollar is the most liquid form of cash. So, of course, I'm looking at it now again because in early August, I took off my shorts and stocks. I took off my longs and bonds. I took off my longs and dollars because the move had an extreme thing on that Monday, August 5th, and obviously that was enough. So I'm back short ES a little here, essentially right at the highs. I'm getting interested in where that opportunity is in NASDAQ. I'm doing the same with Aussie, doing the same thing with Euro, and essentially say, okay, these look a little overcooked, especially Aussie. Aussie is right at resistance here, right at the former high. If it starts to get a little weak in the knees here, I'm going to look for shorts.
Interesting move, Vic. While Ilya was talking, S&Ps were up 6. They just sold off to down 6. Now they're down 3.5. The NASDAQ was up 25 to 30, and now it's down 25. So the NASDAQ just reversed, 50, 55 handles, which is a little weird in a 5-minute stretch in early Sunday night. But there's a lot of stuff going on tonight around the world. There's more war talk and everything else. Maybe that has something to do with it. I'm watching crude oil though, and nothing's moving there. So it's probably, I mean, you just don't see on a Sunday night NASDAQ up 30 and then down 40 in 5 minutes. It's weird.
Part of this, and who knows if that's what this is, but part of it is the Fed isn't just setting the cost of borrowing in the U.S. because the U.S. dollar is so ubiquitous in global commerce. When the Fed sets rates, it's setting the cost of borrowing everywhere. So everyone now, just like on August 5th, when everybody came in after a weak jobs report on August 2nd, and Japan hadn't taken advantage of the move yet or responded. All those markets, they still had this latent thing. Well, they're opening now, and they haven't had a chance to respond to Powell yet. And if the move is, oh, he didn't promise anybody 50 basis points, is what they take away from that, then it's going to be a little soggy here in APAC as they sort of digest all of it.
Tom, what's your? Can I ask you guys both this question? What are your cash levels that you guys are carrying? Are they like relatively high? Are they relatively low with a 16 VIX? I'm not pocket watching. I don't want to know exact cash levels, but then also your delta theta ratio, Tom.
Well, my deltas are pretty short because I got short. I mean, I was very short going into Friday, so I got shorter Friday just by the run up. I didn't get intentionally shorter. My theta is on the high end of the last couple months, not historically high, but of the last couple months. My theta is on the high end. My deltas are on the high end short. My extrinsic happens to be very high relative to the last 6 months. So I think my cash positions based on my Greeks right here are pretty solid. Like I'm probably, and again, you know, I trade relatively large accounts, so I'm probably in the, well, I can tell you, buying power, I'm right around in the 50% range for me, which is definitely on the high end. Like if vol was down to 12, 13, 14, I'd probably be around 35%, you know, using buying power. Right now I'm around 50, which for me is, you know, I don't ever really go much higher than 60. So I'm on the high end.
Yep. That's about where I'm at. I'm not a premium seller though, so I have a high degree of cash levels, and I want upside with option premium here, given what I think could happen to the downside. So that's sort of the way I'm playing it. And I was curious how you were. Ilya, same question to you.
I have a lot of cash, I would say, on the sidelines right now. I don't have a lot deployed. I have a lot of buying power. I think I'm waiting for something to really load into, and when the opportunity arises, I do that. So obviously July was one of those things where I just had a bunch out there. I had the bonds out there and the currencies out there and the stock indexes and crude oil short. So late July, early August ended up being a really good kind of everything was working sort of period. I've taken most of it off already by August 5th, 6th. So at this point, I'm looking. The last thing I took off was crude oil. It had the one bounce off the new kind of bottoming thing that's been developing in it, and got out of there. I put the bonds back on though, so I have a little bit long. I have a call in TLT. I have a call in IEF. So just outright calls, not spreads. And I'm going to see, like, typically when a market starts to go horizontally sideways, it tends to break out in the same direction as it did going in. And it went into this consolidation up. So I have a little bit of exposure. I bought with really low, really cheap outlay. So I could hypothetically let these things expire and they would lose me less than 1% of equity. So fine, whatever. Worst case, my risk is very capped. So I'm looking at this and basically saying, if this sideways consolidation in the bonds works out as usual, it should break higher. That's about all I have on here, and a little short stocks. So lots and lots of firepower waiting for the big risk off move to lean in.
If you said when, maybe we should say if. But Tom, I guess
when.
Tom, what's your game plan for the week? And we'll take us out on that. Hit the like button, everybody. Subscribe to the channel. And Tom, what's the game plan for the week?
Sure. Well, I just told you kind of my game plan. I'm leaning short, and I'm not really bearish. I'm short vol, but I'm not really bearish on vol here. I just always short vol. So it's kind of like my hedge in case I'm wrong. If my deltas don't work, hopefully the vol come in a little bit. But and I am very long Russell and very short NASDAQ and S&Ps. So I have a very much a directional position on this week. So we'll see what happens. But I do not think it's going to be this crazy. I do think it could be a very choppy, maybe somewhat wild week, but I don't see the market going. I think the upside is going to be very limited, especially the first 2 days. They're going to wait, especially Wednesday. They're going to wait for NVIDIA. Not much is going to happen. Maybe we get some big movement, maybe get some decent movement tomorrow. I'm looking for a choppy week with my biases to the downside.
I got a weird feeling we shouldn't be anywhere near the prices we're at. Like we should be Gilded Age 6,000, or we should be 5,000 on the precipice of a recession.
Well, there's way too many people that are comfortable right here, and I don't like it. There's a lot of complacency where we currently are, and that makes me nervous as hell.
I agree with that 100%. All right, everybody, that's going to do it. Hit the like button, subscribe to the channel if you can. For Ilya, for Pete Molmat, myself, Tom Sosnoff, we'll see you back here tomorrow, bright and early at 7 a.m. Central. Tom, final words for the people.
No, I mean, listen, you said it beautiful. I mean, thanks, boys, for a great night, and looking forward to being back in the office this week. It's going to be great.
Peace.
Cheers.